Equity shareholders are permanent shareholder. Preference shareholders are temporary shareholder. Receiving more application is called oversubscription. Receiving less application is called undersubscription. Hello everybody, I am Dr. B.A. Subramaniam, Senior Professor in Commerce and Management, Vidhyaashram, First Aid College, the chapter Issue of Shares of a Joint Stock Company. In the previous class, we discussed about what you mean by equity share, what you mean by the preference share. Equity shareholders are permanent shareholder. Preference shareholders are temporary shareholder. So I will repeat, equity shares are permanent shareholder. Preference shareholders are temporary shareholder. Now we are going to discuss today about the oversubscription and undersubscription. So what do you mean by, the word is subscription means when you take out oversubscription and undersubscription. What do you mean by oversubscription? Receiving more application than required share is called oversubscription. If you have got a 10,000 share, if you receive about 12,000 application, the 2,000 application is called oversubscription. What do you mean by undersubscription? If you have got a 10,000 share, if you receive about only 9,000 application, it is called undersubscription. So what do you mean by oversubscription? Receiving more application is called oversubscription. Receiving less application is called undersubscription. So when you ask the public, we issue the prospectus. We ask the public to become the shareholder. We may receive more application, we may receive less application. If we receive more application, it is called oversubscription. If we receive less application, it is called undersubscription. Oversubscription means receiving more application than required share. Undersubscription means receiving less application than required shares. Now, forfeiture and reissue of share. What do you mean by forfeiture and reissue of share? Cancellation share for the non-payment of allotment, first call and final call is called forfeiture of a share. It is a gain to a company. It can be reissued to another person, we say. So, while you are collecting the share money, assume that the share value is rupees 10. Can we collect the 10 rupees immediately? No, it is not so. As per the Companies Act, what we will do now, first he has to pay on application, then he has to pay on allotment, then he has to pay on the first call, then he has to pay on the final call. How they are going to collect? First on application, then on allotment, then on first call, then on final call. Once you receive this money, they become the shareholder. Assume that a shareholder who holds 1,000 share pays application money, allotment money, and the first call money. He fails to pay the final call. When he fails to pay the final call, the company will issue a notice to them to pay the final call within 7 days. By chance, if it does not turn up, another notice will be given. Pay the money immediately. If he fails to pay the money, the company has got a power to cancel the share. The another way is that by chance, he pays application money, he pays allotment money, but he fails to pay the first call, he fails to pay the final call. When he fails to pay the first call, a chance is given in the final call so that he can pay the first call as well as the final call. If he, by chance, still he fails to pay, the share will be cancelled out. The entire money goes in favor of the company. Whatever the share have been forfeited, cancelled out, that can be reissued to another person. If X is a shareholder who holds 1,000 share, pays application money, pays allotment money, fails to pay the first call, fails to pay the final call, a chance is given in the final call so that he can pay the first call and the final call. It can be reissued to another person. Now, so what I told you, first he has to pay on application, then he has to pay on allotment, then he has to pay on the first call, then he has to pay the final call. What's the procedure? First on application, next on allotment, next on first call, next on final call. Once you pay this money, being installment money, a gap will be given. First, we have to pay the application. After 1 month gap will be given, he has to pay the allotment money. Another 1 month he will be given, he has to pay the first call money. Another 1 month will be given, he has to pay the final call money. So, what the entry goes? All this money will be collected in favor of share cap. The share capital should be built up. So, we have issued the prospectus to build up the share capital. What is the first entry goes? No, he has to pay the application money. Bank account debtor to share application account. We collected the application amount. What's the entry? Bank account should be debited. Share application also consider real account. It is going on. We receive the money. Entry, bank account debtor to share application account. Being application money received. It has been transferred to share capital. Share application account debtor to share capital account. Application money has been transferred to share capital. Capital account has been raised. It has been credited. Raised to the extent of application money. Assume that your application money is 1 and you have got about 10,000 share. What is the entry? Bank account debtor 10,000 to share application account 10,000. We have collected the 10,000. That money will be transferred to share capital. Share application account debtor to share capital account. Once in, after 1 month, we make the allotment. Ask him to pay the allotment. Due entry. Share allotment account debtor to share capital. We ask him to pay the allotment account. Take down. What is the first entry? Bank account debtor to share application account. What is the second entry? Share application account debtor to share capital account. What's the due entry for this? Share allotment account debtor to share capital. Due entry for allotment. Now, he has to collect the allotment amount. What's the entry? Bank account debtor to share allotment account. He collected the allotment account. Due entry for allotment account. Allotment amount is collected and transferred to share capital. Now, due entry for the first call. Share first call account debtor to share capital account. Ask him to pay the first call after 1 month. What's the due entry? Share first call account debtor to share capital account. Now, he pays the first call. What's the entry? Bank account debtor to share first call account. Entry, bank account debtor to share first call account. Being first call money received. Then go to final call. What is the due entry for final call? Share final call account debtor to share capital account. Then when you receive the money, bank account debtor to share final call account. What's the due entry? We ask him to pay the final call. Entry, share final call account debtor to share capital account. When you receive the money, bank account debtor to share final call account. So how the entry goes? First on application, next on allotment, next on first call, next on final call. So ask him to pay. If they want to pay 10 rupees immediately, we won't accept. First on application. Why it is like this? Why you are like this? No. What is this? No? You have got 10,000 share. About 20,000 application has come. Whom to accept? That's why no. What they will know, how much excess application come. All 20,000 application will be put in a box. 10,000 application will be rejected. Another 10,000 has been accepted. Whichever application have been rejected, money will be refunded. Money will be refunded. That's why first we collect on application, then we collect on allotment, then we collect on first call, then we collect on final call. So entry goes bank account debtor to share application to share capital account, due entry for allotment if you want, share allotment account debtor to share capital account. This is a due entry for allotment. When you receive the money, bank account debtor to share allotment account, due entry for the first call, share first call account debtor to share capital account. When you receive the money, bank account debtor to share first call account. Then regarding the final call, share final call account debtor to share capital due entry. When you receive the money, bank account debtor to share final call account. We'll go with an example. To fill this format. Now, what he says, a company issued 10,000 shares of 10 each, payable 2 on application, 3 on allotment, 4 on first call, 1 on final call. All the shares were issued and the money received past the entry. So how many shares were issued? 10,000 share. What's the value of the share value? 10 rupees each. How he has to pay? 2 on application, 3 on allotment, 4 on first call, 1 on final call. Once you pay this money, he becomes the shareholder. You have to pass the entry according to that format only. We will go with that one. What is the first one? Bank account data to share application account. How many shares were issued? 10,000 shares. What's the value of the share? 10. What's your application money? 2. What's the entry goes? Bank account data. Bank account data 10,000 into 2, 20,000 to share application account 20,000. We receive. What's your application fees? 2 rupees. How many shares are there? 10,000 shares are there. What's the entry? Bank account data to share application account. This amount will be transferred to share capital. What's the entry? Share application account data 20,000 to share capital account 20,000. Application money has been transferred to share capital. Application money has been transferred to share capital account. What's the entry? Bank account data to share application account data to share capital account. What's the due entry for allotment? Rupees 3 on allotment. So it is 10,000 into 3. 30,000 to share capital account 30,000. He has to pay, for sake of capital, how much he has to pay? 30 on allotment. First entry is a real entry. Next entry, due entry, real entry. How much he has to pay? 30,000 on allotment. Then he pays the allotment account. Bank account data 30,000 to share allotment account 30,000. What's the entry? We have to receive 30,000. We receive 30,000. Entry, bank account data 30,000 to share allotment account 30,000. Now, we'll go to the first call. 4 rupees on first call due entry. So, share first call 10,000 into 4, 40,000 to share capital account 40,000. We mean to say that he has to pay the first call how much money? 10,000 into 4, 40,000 for sake of capital. It's a due entry. He has to pay how much? 40,000. Now, he pays 40,000. Bank account data 40,000 to share first call account 40,000. What's the entry? Bank account data 40,000 to share first call account 40,000. What is this? Is a due entry. This is a real entry. How much he has to pay? 40,000. How much he paid? 40,000 the first call. Then we'll go to final call. 1 rupee on final call. On how many share? 10,000 share. 10,000 into 1, 10,000 to share capital account 10,000. Entry, share final call account data to share capital account 10,000 being the final call money to be received for sake of capital. Now he pays 10,000. Bank account data 10,000 to share final call account 10,000. He received 10,000. What's the entry? Share final call account data to share capital account, bank account data to share final call account. So how the entry goes? First on application, next on allotment, next on first call, next on final call money. So how the entry goes? Bank account data to share application account data to share capital. What's the due entry for allotment? Share allotment account data to share capital account. Then bank account data to share allotment account. What's the due entry for first call? Share first call account data to share capital account. Bank account data to share first call account. What's the due entry for final call? Share final call account data to share capital account. When you receive the money, share final call account data to share capital account. I have given an example. I will explain that particular one by one. Here example, how many shares are there? 10,000 shares. What's the value? 10 each. First he has to pay 2 on application, 3 on allotment, 4 on first call, 1 on final call. All the shares were issued and the money received. First, he has to pay on application. So, entry, bank account data to share application account. We receive the application money. It is transferred to share capital. Share application account data to share capital account. It has been a transfer entry. Due entry for the first allotment account. Allotment money is 3. Entry, share allotment account data to share capital account. This is a due entry for allotment. Now he pays the first allotment money. Bank account data to share allotment account. Now he pays the allotment account. Entry, bank account data to share allotment account. Due entry for the first call, 4 rupees he has to pay on the first call on how many share? 10,000 share. Share first call account data to share capital account, first call money. Now he pays the first call bank account data 40,000 to share first call account 40,000. Then we go to the final call. Share final call, he has to pay how much money? 1 rupee. Share final call account data to share capital account. When he receive the money, bank account data to share final call account. Once he becomes full amount he has been paid, if he become the shareholder, their money will be, their name will be registered in the register of the joint stock company. Then he will be declared as a shareholder. A share certificate will be issued. By chance, if he fails any call, we make first application, then allotment, then first call, then final. If he fails any amount, no, so his share will be cancelled out. That is called forfeiture. That can be reissued to another person is considered. Now, a company issued 10,000 share of 10 each, payable, application rupees 2, remaining allotment, first call and final call. Company received how many applications? 16,000. Application 4,000 rejected and excess adjusted to allotment. What the problem says, no? We have got 10,000 shares, but we have got only 10,000 shares. But how many application received? 16,000 application received. How many shares are there? 10,000. How many application received? 16,000. How many application more? 6,000 application more. By chance, what the problem says? 4,000 application rejected. Excess 2,000 adjusted to allotment. Adjusted. So how many shares are there? 10,000 share. How many applications received? 16,000. They would have been rejected how much? 6,000 application. But they rejected how much? 4,000. How much accepted now? Actually 4,000 is gone. How much accepted? 12,000 application. For 10,000, they accepted 12,000 application. It is called pro rata. Proportionately accepted. How many application accepted? 12,000. For how many share? 10,000 share. If we cancel the 0, 2 5s are 2 6s are. They are in the ratio of 5:6. What do you mean by 5:6? No, for every 6 application, we are going to issue 5 share. Next, how much application he has to apply? 12 application. Then he will get the 10 share. Minimum 5 share, not less than 5. 5 share, 6 application, 10 share, 12 application, 15 share, 18,000 application. It goes like, it is called proportionately accepted. So for 10,000 share, 16,000 application received, would have been rejected how many application? 6,000, but rejected how many application? 4,000. Excess adjusted to allotment. How the entry goes? This is called pro rata. How many application? 16,000. What's your application fees to? First entry, bank account data. First entry, bank account data, 16,000 into 2, 32,000. 2, share application, 32,000. We received how much money? 32,000. What's the entry? Bank account data to share application account. Actually, how much you require? 10,000 into 20,000 only. How much more? 12,000. Out of that, how much rejected? 4,000 to 8,000 will return. The balance will be adjusted to allotment. Next entry, second entry, share application, share application account data 32,000 to share capital. How many shares we have got? 10,000 into 2, 20,000. How many application rejected? 4,000. 2 bank account. This is for rejection. 4,000 into 2, 8,000. How much still left over? Another 4,000 adjusted to allotment, to share allotment. So 20 plus is 28 plus 4,000. So how much you receive? 32,000. How much go to share capital? 20,000. How much you pay back? 8,000. How much adjusted to 4,000? While he is paying for allotment money, how much he pays less? 4,000. This is called adjusting entry. So what's the first entry goes? Bank account data to share application account. We receive the money. What's the next entry goes? Share application account data to share capital. What we require? How much application is rejected? 4,000. To bank account, 8,000. How much adjusted to allotment? 4,000. So what's the first entry? Bank account data to share application. Second entry, share application account data to share capital, to bank account, to share allotment. This is only an adjusting entry. So in exam, no, a major question will be asked for issue of share, especially for third semester is considered. Such a good problems they are going to ask about the issue of share, not as per your PUC. It is standard has been changed. It's a third semester. They are going to ask a very, very good question for you, which includes pro rata, forfeiture, reissue. You have to prepare the journal entry and we have to prepare the balance sheet also. That we are going to discuss in the next class. Before that, I will explain what actually means. So first we have to collect on application, then you have to collect on allotment, then you have to collect on the first call, then you have to collect on the final call. So first the money here is application is a real entry, then allotment is a due entry, first call is a due entry, final call is a due entry. So if we receive the more application by chance, the example goes like this. 10,000, how many applications received? 16,000. They would have been rejected. How many application? 6,000. But they rejected how much? 4,000. How much they accepted? 2,000. We say that 10,000 into 12,000, we say pro rata, proportionately accepted. They are in the ratio of 5:6. What is 5? Number of share. What is 6? Application. For every 5 share, they have to accept 6 application. If you want 10 share, they have to accept 12 application. So what's the first entry goes? Bank account data to share application account. Second entry goes share application account data to share capital account, to bank account, to share allotment account. Once you know that now, we can go with them. So in the next class, now we have discussed what is allotment account, what is share. Now, first one, there are 2 types of share. One is equity share, one is the preference share. Equity shareholders are permanent shareholder, preference shareholders are temporary shareholder. Whatever the entry we pass, only for equity share. There are 2 types of subscription. One is oversubscription, another undersubscription. Receiving more application is called oversubscription. Receiving less application is called undersubscription. And we discuss about the forfeiture, cancellation of share for the non-payment of either allotment or first call or the final call is considered like this. No, That is called your application entry, allotment entry you have passed, first call entry has been passed, final call entry, and also we discuss about the what's called proportionately accepted. No, if we receive more application, if we rejected the application, money will be paid by the excess money will be adjusted in the allotment account. All we have discussed today. In the next session, what we are going to do, a problem with a per feature and reissue, and the same type of problem we are going to say if the full issue is made, if partial issue is made, and the what's called per feature, how to pass the entry. We'll discuss in the next class. Till then, goodbye. See you in the next session.